I'm talking with Roger Conrad. Hi, Roger, and thanks
Hi,
for
Nancy.
being here.
Thank you.
I'm excited about your new venture, and I'm excited about your one of the new newsletters you're going to do, the Capitalist Times. And we've been talking a little bit about high yield and all of the companies that have been really coming to the market, beginning to pay dividends. I never thought I'd live long enough to see people like Apple Computer paying a dividend, or any of the other number of technology companies. And sometimes it seems like maybe they shouldn't have rushed to that. What is your opinion?
I think that's right. I mean, I go back to the 90s when we were in the exact opposite environment. I was writing a letter about utilities, and of course no one was really interested in dividends then. No one's certainly not interested in utilities or safety or anything like that. So a lot of the companies tried to be something they weren't. They tried to invest in technology or energy marketing, and of course we had an historic crack up in 2001, 2002. A lot of companies either filed bankruptcy or were on the very brink of it. We've had a huge recovery period since then, and of course the stocks have become a lot more popular because people have gotten interested in yield, but that's definitely true. I think companies, and this is one thing we really try to do, ferret out the companies that are just offering yields because it's a popular thing, and separating those from companies that really can pay sustainable dividends, hopefully sustainable and increasing dividends over time, and that's how you make your money. A lot of these companies, if they're not meant to pay a dividend, if they're in a business that's not conducive to that, you're really courting disaster. And of course, fads change in investing, as we know, and the day will come when people are more interested in growth again. Companies need to remain true to what they're set up to be, the right business plan for their industry.
Yeah, because the worry is if somebody just decides it's a flavor of the month to pay dividends, and then next year maybe they pay 2 or 3 dividends, and then next year, oh, we're not going to pay dividend. Well, we know what happens to the price of stocks when you do that.
That's absolutely right.
Yeah.
And in fact, I used to write a letter on Canada. We've taken that expertise into our energy and income advisor. But when I started that letter, there was a real boom in the issuing of income trusts, and obviously the appeal of Canadian income trusts, big dividends and so forth. A lot of companies that had no business paying out anything. And when, of course, the tax situation changed, so did they. A lot of them cracked up, and those that didn't crack up eventually went away in 2008 when, of course, we had a major shock to the economic system. So, yeah, absolutely, it's a time for investors to really focus on businesses of the companies, sustainability, also on the price, because a lot of these dividend-paying stocks have become very popular. A lot of expectations built into those prices, and you can really see a reversal if those expectations should shift.
Right. Good advice. Thank you, Roger.
Thanks, Nancy.
And thanks for being with us on the MoneyShow.com video network.